Dear students, in the previous session we have studied about the meaning of not-for-profit organization, its characteristics, and how to treat the items into capital as well as revenue. In this session we shall see what are the financial statements that are prepared by a not-for-profit organization. A not-for-profit organization, it maintains three important documents. It is mandatory also. They prepare receipts and payments account, they prepare income and expenditure account, and they prepare balance sheet. Let's understand the meaning of receipts and payments account as well as income and expenditure account. Receipts and payments account, it is prepared by a not-for-profit organization. It is the summary of cash receipts. Cash receipts means including bank. It is a summary of cash receipts and payments during an accounting period. In an accounting period, what are all the cash receipts we have, we record them in the receipts and payments account on the receipt side, and what are all the cash payments we have, we are recording them in the payment side of receipts and payments account. So the meaning is quite simple. It is a summary of cash receipts and cash payments during an accounting period prepared by a not-for-profit organization. Then what are the features of these receipts and payments account? The first feature is it is a real account. It is a real account. As we are preparing cash account, the same way we are preparing receipts and payments account also. That's why it is a real account, and it is similar to cash book. It is similar to cash book. In the cash book we are preparing or we are recording all the cash receipts and all the cash payments. Then what is the difference between cash book and receipts and payments account? In the cash book we are recording the transaction in the chronological order. Whenever there is a transaction, we record them in the cash book. For example, when you pay the salary in the month of April, we record them, and when we pay the salary in the month of May, we are recording June, July, August, September, like that. We record them separately in the cash book. But in receipts and payments account, we are recording the summary of that under one head, salary. By salary, we are writing on the payment side. So this is the basic difference between receipts and payments account and the cash book. And it is the summary of all cash receipts and cash payments. It is a summary of cash receipts, of course including bank also. It is a summary of cash receipts as well as cash payments, and it is prepared with the cash system of accounting. Cash system is followed, and it does not include any outstanding item. Whatever we receive, we are writing them. Outstanding items are not recorded in receipts and payments account. And the non-cash items like depreciation, bad debts, these items are not recorded in receipts and payments account. And one more feature is it begins with the opening balance and ends with the closing balance. So these are the features of receipts and payments account. So we are preparing one more account called income and expenditure account. What is the meaning of income and expenditure account? Income and expenditure account is an account prepared at the end of accounting period, matching revenue receipts with revenue expenses. The revenue expenses and the revenue receipts are compared or they are matched, and whatever the result we get, they are not called as profit or loss, they are called as surplus or deficit. So income and expenditure account is an account prepared at the end of accounting period, matching revenue receipts or income with revenue expenses to determine surplus or deficit. What is the meaning of surplus? See, in the trading organization, while preparing profit and loss account, we compare the expenses with income and the result is called net profit. So, not-for-profit organization, it is established with the objective of rendering services. There is no question of profit. That's why the difference is called surplus and not as profit. And the difference, if it is a negative balance, then it is called deficit and it is not called as loss. So, this account is prepared to determine surplus or deficit. So, what are the features of income and expenditure account? See, as the name itself says, income and expenditure. That's why it is nominal account. Income and expenditure account, it is a nominal account. It is similar to profit and loss account. It is similar to profit and loss account, and it is a summary of incomes and expenses. It is a summary of incomes and expenses, and it includes revenue items only. It includes revenue items only. Capital items are not recorded in income and expenditure account. They are recorded in the balance sheet. And the non-cash items like depreciation or bad debts, they may be entered. That is the fifth feature of income and expenditure account. And it does not begin with any balance. There is no opening balance, there is no closing balance. So, these are the features of income and expenditure account. And the third important document which is prepared by a not-for-profit organization is balance sheet. So, what is the meaning of balance sheet? You have prepared it in the first year PU. A balance sheet is the statement showing the assets and liabilities of an organization. Here also we are preparing in the same way, but the only difference is in the trading account, while preparing balance sheet, the difference between assets and liabilities was considered as capital, but here in not-for-profit organization, while preparing balance sheet, we must be cautious. The difference between assets and liabilities, they are called capital fund. So, these three important statements are prepared by a not-for-profit organization. Now, let's see what are the difference between receipts and payments account and income and expenditure account. As I have explained, receipts and payments account, it is a real account, and income and expenditure account, it is the nominal account. That is the first difference. And the second difference is it is similar to cash book, and income and expenditure account, it is similar to profit and loss account. And the third important difference is it is a summary of all cash receipts and cash payments. So, it is a summary of cash receipts and cash payments, but income and expenditure account, it is a summary of incomes and expenses. Incomes and expenses. So, it is the summary of cash receipts and cash payments. So, fourth important difference is it is prepared on the cash system of accounting. While preparing receipts and payments account, we follow cash system, but income and expenditure account is prepared on the accrual system. And the fifth important difference is receipts and payments account, it includes both revenue as well as capital items. Both the items are recorded in receipts and payments account, but in income and expenditure account, only revenue items are recorded. Capital items are not recorded, they are recorded in the balance sheet. And The sixth important difference is recent payments account, it does not include outstanding items. It does not include outstanding items, but income and expenditure account, it includes outstanding items. And the next difference is recent payments account, it does not include non-cash items. Non-cash item is like depreciation. We are not recording them in the recent payments account. In income and expenditure account, we are recording non-cash items like depreciation. And perhaps the last important difference is recent payments account, it begins with opening balance and ends with closing balance. But income and expenditure account, it does not have any opening balance and it does not have any closing balance. Okay, now let's see what are the unique terms which appear in the documents of not-for-profit organization. See, normally we come across the terms called entrance fees or admission fee, life membership fees, special receipts, donations, legacies, grant, subscription, honorarium. So these words are normally recorded in the books of accounts of recent payments account. So before we go to the problem, let's understand what is the meaning of this. Entrance fees. What is the entrance fees? Entrance fees or admission fees are the fees which are received by a not-for-profit organization from its members. So it may a not-for-profit organization, it may receive the membership fees on monthly basis or annual basis, or there may be life membership fees also. So any admission fees received, normally they are considered as revenue receipts. So they are recorded on the debit side of recent payments account as two entrance fees. They are recurring in nature, that's why they are considered as revenue receipts. So all the revenue receipts are entered in income and expenditure account, so we have to write them on the credit side as by entrance fees or admission fees. So here we have to note one more point is the items which appear on the debit side of recent payments account, they go to the credit side of income and expenditure account, and the item which appear on the credit side of recent payments account, they come to the debit side of income and expenditure account. This point you have to bear in mind while working out the problem. And the second important term used by a not-for-profit organization is life membership fee. What is a life membership fee? Life membership fee is the fee received by a not-for-profit organization from its members in one lump sum. Instead of paying the membership fee annually or every year, a member he can pay the entire amount in one lump sum. That is called life membership fees. It is not recurring in nature, that's why we have to consider them as capital item. So in the recent payments account we record both capital and revenue item. So life membership fees, it is a receipt, it is recorded on the receipt side. So do we need to write them in the income and expenditure account? No, because it is capital in nature, that's why it is not recorded in income and expenditure account, it is recorded in balance sheet. And the third important item or term used in not-for-profit organization financial statement is special receipts. Special receipts are the receipts received for a special purpose. Like the members, they may contribute for annual dinner, and any contribution received in such form, they are recorded in a separate account called receipts for annual dinner account. So whenever there are such receipts, they are recorded as special receipts, and they are revenue in nature, that's why they have to be entered in the income and expenditure account also. So the item which appear on the debit side, it comes to the credit side of income and expenditure account. And the next term used is donations. Donations means it is the amount contributed by the public to a not-for-profit organization to do the charity work. Here the donor, he may put some condition as to the donation should be used for a particular purpose only. When the condition is given or the purpose for which the donation should be utilized is mentioned by the donor, then such donations are called specific donations or special donations. When the purpose is not mentioned by the donor, the condition is not put by the donor, then the not-for-profit organization, it can utilize such donations for any welfare activity, and such donations are called general donations. So while treating them, the general donations are revenue in nature. We may get such donation very often, that's why they are revenue in nature. We write them on the receipt side of recent payments account. Whether it is general donation or specific donations, we have to write them on the receipt side of recent payments account, but while recording them in the income and expenditure account, only general donation should be recorded. Then where should we write the special donations? Special donation should be recorded in the balance sheet because they are capital items. They should not be used for any purpose. That's why they must be recorded in the balance sheet. So out of donations, general donation should be recorded in income and expenditure account, and special donations, they must be recorded in the balance sheet. However, when the problem states that 50% of the donation is capitalized, then you have to capitalize 50%, only 50% should be entered in the income and expenditure account. When the condition is given in the examination, then you have to follow the condition given in the question paper. Okay, now let's see the legacies. Legacies are the gifts received by a not-for-profit organization as per the will of a donor. When a person, he prepares a will stating that after his death, his property or his deposit should go to a not-for-profit organization, and any gifts or donations or deposits or property received by such means, they are called as legacies. Then whether they are revenue in nature or capital in nature, they are capital in nature. We do not get such legacies very often. That's why they are capital in nature. They should be entered in the balance sheet. But in the recent payments account, you have to write them as legacies on the receipt side. And you have to write them in the balance sheet also. Then what is the difference between donations and legacies? When a person comes and gives you the donation, then it is called donation. When you receive such donation after the death of a person, then they are called legacies. Okay, now let's see the grant. What is the meaning of grant? By looking at the charity activity of not-for-profit organization, the government may give you the grants. And such grants are not recurring in nature, so we are writing them in the recent payments account, and the same amount is written in the balance sheet and not in the income and expenditure account because they are capital in nature. Then comes subscription. Subscription is the amount received by a not-for-profit organization from its members to do the charity work. So subscription, they are recurring in nature. Again and again we are getting the subscription from the members. So it is revenue in nature. They have to be entered in the receipt side of recent payments account, and they must be entered on the credit side of income and expenditure account. Honorarium. What is the meaning of honorarium? The work of not-for-profit organization is managed by some of the staff, and normally they are not paid the salaries. They are doing the volunteering work. They are doing the voluntary work. That's why they must be paid some money, and that amount is called honorarium. And in a hospital, a well-known doctor, on charity purpose, he may come and give the treatment, and when you pay some amount to that person as a token of your gratitude, then such amount can also be considered as honorarium. So it is not the remuneration, it is the amount given for the service, voluntary service, to maintain the expenses, and they are recorded on the credit side of income and expenditure account, and on the in the recent payments account they are recorded on the debit side under receipts. These are the unique items which appear only in not-for-profit organizations' financial statements. Now let's see how to treat the items of subscription when there is outstanding, when there is advance or prepaid, and the treatment of stock, opening stock as well as closing stock. See, you have studied in your sole trading concern while preparing final accounts, you have prepared trading and profit and loss account and the balance sheet. While preparing profit and loss account, you have seen a lot of adjustments, maybe for payment of manager's salary or debtors, provision for debtors. So all complex adjustments were there. But while preparing income and expenditure account, you need not worry about all those complicated adjustments. Here only a few adjustments are given, maybe relating to outstanding and advance items, maybe relating to consumable stock, opening stock, closing stock, or it may be relating to some depreciation. Only these three major adjustments were given. The variety is less, but the number of adjustments may be more. The outstanding of previous year, outstanding of current year, advance of this year, advance of next year. So like this, the number may be more, but normally there will be less variety of adjustments in income and expenditure account. See, every time we prepare a final account of sole trading concern or any other form of organization, there will be trial balance. From the trial balance, we write them in trading account, profit and loss account, and even the balance sheet. But in not-for-profit organization, we do not have any trial balance. In the examination, the trial balance will not be given. You will be given with the recent payments account. As you know, the recent payments account, it involves only the transactions of a particular year or accounting period. In an accounting period, what are all the cash and bank receipts? What are all the cash and bank receipts? They are entered on the debit side, and what are all the cash and bank payments? They will be entered on the credit side. The purchase of asset, they were entered on the credit side, and whatever the balance you have, it will be balance carried down. So cash balance is known. Any other information, it may not be available. Now let's see an example where I'll prepare recent payments account of a new firm where we are writing the receipts on the left hand side and the payment on the credit side. Let us assume that this recent payments account is for the year 2018, for the year ending 31st March 2018. So when you start a new not-for-profit organization, the members, they may give you the entrance fees. So I'll take entrance fee as some 50,000 rupees. We may get donation from the public. Two donations, the amount may be another 1 lakh. Definitely there will be a subscription the subscription amount will be another 50,000. Let's take for example. So we have the total resource of, we have entrance fees, donations, subscriptions, all these are receipts, and with this much fund in our hand, we have to do the charity work. To do the charity work, we need some land and building, some office is necessary. For that purpose, in the beginning, you may purchase a land. Maybe at a concessional rate for a charity purpose, people may give you the land at concessional rate, and in that land you are constructing a building. So the cost of land and building may be 1 lakh rupees, let's assume, and you are purchasing the furniture again for some 25,000 rupees. Now office is there, land and building and furniture, everything is ready. Now you start doing the charity work. The total amount of charity work